All right. Good afternoon. Good afternoon. This is Dallas Lanier with Project Green, Grassroots Economic Empowerment Network. And our vision is turning everyday people into money heroes. We define a money hero as someone who is pursuing their own financial goals and then they're helping somebody else to do the same. And notice we said pursuing your money goals. It doesn't mean that you've reached all of them, but you have some goals that are defined. Usually that means that there's some numbers connected to it, not just, I want to do better with my money, but I want to save $500 in emergency savings by July 2022, something like that. That would be a goal. And you're working on that. So you have a strategy in place. And then you invite somebody else to join you in that. That makes you a money hero. Or you might just even get a book from the library and teach your kids about how to handle money. That makes you a money hero. But today we want to talk about some some things that might help you to pursue those goals as well, and that's understanding and trying to hopefully save some money on your auto insurance. And I'm going to bring in my guest here. And when I do so, I'll tell you a little bit about why I wanted to have this conversation because I had some confusion about Michigan's new auto laws. And I believe that he can help us. So, if you will, if you find this topic interesting, would you um, share it? Share this broadcast with others on Facebook or Twitter or however you are watching, and invite your social media friends to join us. So let me bring our guest in here, and there he is, Sterling Massey. How are you, sir?
I'm doing great. Thank you for asking and thank you for having me.
Absolutely, so glad to have you here today. And so, Mr. Massey, would you tell us who you are and what you do and how long you've been doing it?
Absolutely. As you mentioned, I'm Sterling Massey. I'm with Massey Insurance and Financial Services, and that's an organization that actually owns and operates four businesses, one of which is Massey State Farm. And then we have Massey Mortgage, and we have S&R Real Estate Investment Holding Company. And then last but certainly not least, Financial Stewardship Ministries, which is a nonprofit organization that is out there to do kind of what you're doing, Dallas, and that is to help folks who don't otherwise have access to financial professionals have access to those and train them on ways to make their money work better for them and to grow wealth.
Man,
Been
that's
doing this for about 12 years now. And prior to that was in the field of social work, a marriage and family therapist. So for 14 years.
wow. Well, I'm sure there are plenty of ways that you could tell us, if we had time, about how those two things connect, right? How our finances connect to marriage and family and wholeness and stability. So we'll have to get you back on to talk about that another day.
Would love
Um,
to.
yeah, but Sterling, I reached out to you because, well, I've known that you've been doing this for years, but then specifically you partnered with Project Green and the Kent County Tax Credit Coalition back in April when we had our inaugural Economic Empowerment Conference, and you were one of our sponsors. So thank you again for that. But I wanted you to guide us a little bit in this conversation about Michigan's new auto insurance laws. I say new, although it's been around now for a little over a year.
Hmm.
Um, but something happened to me just last week that got my attention once again, and that was my insurance agent sent me the forms that I needed to fill out around these new laws, and I thought to myself, I just completed these forms earlier this year, so I thought, okay, am I doing this because we had some changes? We had another vehicle added to our policy. That must be it, right? And I contacted him. He said, no, every time you renew, you've got to sign these forms. So I thought, okay, that's going to be a problem for people because um, if that's the case for everyone, somebody's going to miss doing that, and then they're going to be charged a higher rate. And then I called you, and you said, well, it doesn't have to always work like that. So I said, okay, this is a conversation that we need to have with more people, so that they can understand. what this new law is, how it might affect them, how they can learn more so that they can save some money. So I'm going to stop talking a bit. And would you just tell us a little bit about what the changes were? Let's start there, Sterling.
Okay. Okay. Great. So for years and years, we've heard the term no fault insurance in Michigan. And that meant a few things. And we got that a little bit twisted for a while. And a year ago, last July, the our state legislature agreed that there should be some changes made. And primarily what they did was they instructed or made it law that we make more options available. We, insurance carriers, make more options available to its customers, specifically around two areas. The first being personal injury protection, or the coverage that you need in the event that you or someone in your car is in an accident and requires medical services. We affectionately in the industry refer to that as PIP coverage, personal injury protection. The second major area of change was in the liability protection. I call that your lawsuit protection. So you're in an accident, in spite of the fact that Michigan is a no fault state. If you're in an accident, you caused that accident, and someone in the other car or the person you injured is unable to work, in the state of Michigan, you can be brought to court for that. Up until a year ago, last July, the state of Michigan required that everyone who has auto insurance have unlimited protection through their insurance company, through their auto insurance company. So what that meant, the good news was no matter how much it costs you to get your medical services need, or no matter how much it costs us to protect you or represent you in court, you had to be covered, that had to be paid by the insurance company. Made the premiums go through the roof, and that was the bad news. So when the change happened, you had options. You could decide to no longer have unlimited personal injury protection coverage. You could decide to have certain amounts of liability coverage, and you got to choose that rather than the state or the insurance companies saying you had to have unlimited coverages. Okay, so that was the change. Now, when the change happened, the state of Michigan said, insurance companies, you always have to have record of the choices that your customers made with regard to those options. Okay, so that's basically what the law says. You have to have proof, insurance companies, that your customer selected an option and that you're giving them the coverage that they selected, and you're not just deciding to give them unlimited coverage or the minimum amounts of coverage. We have to have proof that your customers made that selection. Different insurance carriers handled that responsibility differently. So you, in your case, Dallas, you're with an insurance company that says the way we're going to handle that is we're going to make sure that all of our customers send us a new form every 6 months, which is the term of the insurance policy, the auto insurance policy. So then what happens is that customer has to send that new form in every 6 months. If that doesn't happen, then as you alluded to, Dallas, the insurance company is required by the state of law, by the state of Michigan, to give you unlimited coverage, which means your policy goes up. The premium goes up because you've got that unlimited coverage. Now, again, I want to go back to different insurance companies handled that state requirement differently. Some insurance companies said, got to turn in the documentation every 6 months. Other insurance companies said, we'll maintain those documents, and we'll get in contact with you every 6 months. And if there's no change, then we'll use the documents that you originally submitted to us. If there's a change, we'll have to get new documentation for us. There is a little kind of wrench in the law where the state of Michigan says if a customer chooses to have the minimum coverages, then we have to show proof that we had that contact or we have that new form every 6 months. But if they choose to have certain higher coverages that are options, then we don't necessarily have to do that. So that's kind of putting a whole year's worth of change into one 3 to 5 minute explanation. But I'd be happy to answer any questions that anybody have about it, because at first glance it feels confusing, but when you unpack it, it's really not. Okay.
Man, yeah. So thank you for beginning to unpack it there for us. And I want to invite anybody who is watching. We do have a handful of people who are watching live. If you have questions, go ahead and put them in the chat in the comments section there, and we will do our best to bring up those questions on the screen and get them answered if they are questions that we can address during our brief few minutes here. Uh, so so. So you said that the bad part. Well, yeah, the bad part about the change in the law is that now our coverage may be limited depending on what we choose. The good part, though, was that it could reduce our premiums and save money in the near future. So, Sterling, can you give us an example of or an estimate of about how much a person might save if they chose one of those lower coverages rather than choosing unlimited?
Yeah, and I'm going to do that carefully because a lot of the premiums from insurance company to insurance company might be a little bit different here and there because of specific idiosyncrasies of the company. But on average, when the change happened, we saw about a 10 to 15% decrease overall in premiums, even if you kept the unlimited amount. So if you kept the unlimited coverage for PIP, for the personal injury protection, which is what we were required to keep before the law change. If you kept that unlimited coverage after the law change, you should have seen 10 to 15, maybe a little bit more percent decrease in premiums. And I'll explain that if there are questions that come around that, but I want to go to the other pieces. Now, if at the point at which the law changed and you decided to go from the unlimited coverage down to, say, a $250,000 coverage, which is an option, you're probably going to save, depending upon your vehicle and some of the other things there, you're probably going to save somewhere between $10 and $12 a month in that premium. Again, it's difficult to say exactly what the amounts are, but you should expect to see a change. Now, the options went from everyone for PIP coverage, personal injury protection, went from everyone having unlimited coverage to you could go down to a minimum of $50,000 worth of coverage, or you could do $100,000 worth of coverage, $250,000 worth of coverage, or $500,000 worth of coverage. Those are the basic ballparks, basic benchmarks. Okay, so if you went from unlimited to 250, you save somewhere around $10. If you went from unlimited to 100, you save somewhere around $15 a month. And so you should see about a $5 incremental change the lower you go. Now, there are some options available that a lot of people don't know about, even in addition to that. For example, if you currently receive Medicare, which is the insurance that you receive after you went a lifetime of working and you're no longer working, you're retired, and you got Medicare, or if you're on disability, in certain circumstances, you can opt out of PIP coverage completely. You can opt out of the personal injury protection coverage completely. And people see a significant savings there on the premium. There are some dangers associated with opting in those situations, and you should talk to your individual agent to determine what the disadvantages of opting down or out. And so I want to caution you, don't just decide just to save money, because you may be cutting off your nose to spite your face. Make sure you have that conversation with your agent. If I go from this coverage to that coverage, what are the disadvantages that I'm going to be looking at? Ask that question. And I'll stop because I think I saw a question pop up.
No, yeah, that was all great stuff. So I just want to clarify, you were saying in those estimates, $10 savings, $15 savings, that was per vehicle per month, right? Yeah. So,
Absolutely. That is
okay.
per vehicle per month. And
Hmm.
again, I'm saying it cautiously because
Sure.
these are just ballpark numbers, but yeah.
Right.
Mhm.
Yep. So then if a family has two vehicles, you know, at least perhaps $20 a month savings, which is $240 over the course of a year, which is significant because, you know, what we know and what we talk about within Project Green is that, you know, about 40% of households in America cannot handle a $400 emergency. So if you can keep an additional $20 a month and put that away in savings, then you can start building up your emergency savings that could really, you know, prevent you from getting going into debt, especially prevent you from going into predatory these predatory lenders. So these things are significant, and it's important for us to understand how they help us. The comment that came up, Sterling, was actually just a comment more than a question. Bobby, who was on our team, said that she changed her PIP coverage and she saved about $200 a month annually. So that's a great example of what we just talked about. We saved in our household about $400 annually. So it's significant. Uh,
Yeah. Yeah. I mean, if you use those numbers, that $200 annually, that's about $16, $17 a month
mhm.
difference there. And there are other scenarios that if you have an agent, if you talk to the agent, there could be adjustments and or scenarios that are put into effect that could even raise the savings more. And so it's, if there's anything, my hope that you come out of this is don't don't treat your insurance policy like a commodity. Treat it like a pair of shoes. You go shop for a pair of shoes, you try them on, you ask questions about them, you walk around in them. You don't just buy a pair of shoes because they just happen to be the cheapest on the rack. And by doing that, you'll get the best possible scenario. You'll get a policy that meets your needs that are important to you and say and show savings to you.
Yeah, that's a great analogy, right? Because you know, one pair of shoes might fit perfectly one for your friend, but that same pair doesn't work for you. So you've got to find the insurance that works for you and your situation. Um, Bobby also said that she definitely consulted her insurance, excuse me, insurance agent first in making her decision. Um, uh, she also supports your analogy. Uh, Stephanie, who's also from our team, said that due to the confusion surrounding these new laws, would you recommend speaking to a live agent when changing coverage rather than purchasing online? So, in other words, she's saying, does it make more sense to speak to somebody in person rather than purchasing online to make these decisions in light of the new laws?
So, at first glance, I say absolutely. If you can talk to an expert, if you can talk to an agent who is charged with the responsibility of knowing the law and also has the experience of knowing how different decisions affect premiums, then by all means do that. I don't want to minimize the possibility that there are some people out there who are do-it-yourselfers, and there's information out there online that can help you. If you go, for example, on the DIF's website, the Department of Insurance and Financial Services website, they have very a comprehensive set of information around that. But because I'm an agent, I believe, and I believe that if I need a home built, I might be able to do it myself. But there's a carpenter out there who knows all of the everything you need to do to make it perfect. And I believe talking to an agent is the equivalent, making sure that that person has your back, that they know what they're talking about. And you'll also get some very important information there. If you're talking to an agent or an agent's office and they seem impatient with you as you're asking those questions, that's sending a message about whether or not they're going to look after you when you really need them. And so you might want to keep that in mind. If you're talking to an office where they spend the time, they ask you questions around what's important to you and what your circumstance is before they offer a recommendation, that's going to tell you some information too. And that's one piece that you can't necessarily get if you go online, although the information is there. You just got to make sure you do your homework. Dallas, I lost your audio completely. I don't know what happened.
Nope, I had
Okay.
it muted. That's what happened.
Oh, okay.
So,
All right.
so Stephanie agrees with your comment. I want to go back for a minute. You said you were talking about the state of Michigan's website, and I brought that up on the screen for a minute. You referred to DIFS, which is the Department of Insurance and Financial Services, and so they have created this website, this web page, where people can go and learn more. It's michigan.gov/auto insurance. So we certainly recommend people check that out as a resource. And then, uh, Sterling, are you open to people emailing you or contacting you as well?
Sure, sure, absolutely. And it doesn't matter whether you're a current customer of mine or not. My goal is to make sure everyone knows where to go and how to get the information. So please, please, if you have a question, give me a call. My phone number to my office here is area code 616-532-6071. And the folks here at the office will be glad to answer any questions you have around the new law. One of the things that we found is that the law itself is not confusing. It's just the jargon that's used to describe all the different things and all of the different processes. So I want you to think about two primary pieces of language. Number one, anytime you hear liability coverage, that's your lawsuit protection. Basically, what that means is that's the part of your policy that's going to pay if you lose a lawsuit that resulted because of an accident that you caused. And number two, that's the part of your policy that obligates your insurance carrier to provide legal protection for you if you're sued. So I affectionately refer to liability coverage as your lawsuit protection. And so ask yourself the following question. If I had to sue somebody, would I sue them for the amount of my coverage, or would I sue them for a lot more? So to say it a different way, the minimum required in Michigan of coverage is $50,000.
Mm-hmm.
So you can actually purchase $50,000 worth of lawsuit protection in Michigan, and you can probably get it for pretty cheap. The purpose of insurance is being there when you need it. If you went to the 250, or if you went to the unlimited coverage, you could probably get that same coverage for an additional $12 to $20 a month. Now, if you needed it, how often do you think you'd be sued for $50,000? Most of the time, people sue for a lot more than that.
Mm-hmm.
So I'm with State Farm. If you told me I want to be covered for $50,000, I instruct the team members here to say, yeah, we can absolutely do that for you. And you are the boss. We're going to do that for you. But we want to make sure you understand the consequence. If you're in an accident, you get sued, we're going to hand you a check for $50,000. And whether they sued you for $50,000 or $50 million, we're going to say, thank you for doing business with us. Here's your $50,000. And if it happens to be that they're suing you for $50 million, you got to come up with the rest. And we're talking about a $12 a month difference. So that's the liability. And then briefly, the PIP. PIP, when you hear PIP or when you see personal injury protection, that's the coverage that pays the medical bills. So you're in an accident, you sustain an injury, you can't work for 6 weeks. The PIP coverage is going to pay for the insurance. They're going to pay for the medical services. There are other parts of your policy that you want to make sure will pay because you can't go to work. And all policies have that. So if you're do it yourself, you're go to the glossary first and make sure you have a common understanding of the wordings, the words that are used, the language that are used before you make your decision.
That's very helpful. So liability equals lawsuit coverage, and the PIP or the PIP equals medical coverage.
Yeah, your personal injury protection. Yes.
Okay. All right. Good. I want to just see before we wrap up here if there are any other questions from anyone who may be watching live with us, questions or comments. Um, and if not, just I believe then we will conclude our time. So we shared your phone number there. Sterling, would you, not to put you on the spot, but would you want us to share your email, or is the phone number the best way to reach you?
Yeah, you can do the email. I sorry, I forgot to mention that. But yeah, my email is pretty easy to remember. My first name, Sterling at massey.agency.net. Massey is MASS. That's it. Yeah,
There it is.
that's
Oh,
exactly it. And then we're located on 28th Street in Wyoming. Our address is 2024 28th Street, Wyoming. We're just west of Rogers Plaza and just east of Byron Center Boulevard or Avenue. And our doors are open, so you're welcome to come in if you happen to have a question and it's easier for you.
fantastic. Well, Sterling, we appreciate it. You shed light on it for me, and even though I do this personal financial stuff all the time, I figured that if I had questions, likely a lot of others had questions as well. And so let me share a comment here from Bobby. She said, "Thank you. Auto insurance can be very confusing, and this is so helpful." So appreciate those who watched live. If you're watching recorded, we invite you to still share it with others, and just let this be a resource and a tool for our community. So Sterling, thank you, and we hope to talk to you again soon.
It's my pleasure. Anytime, Dallas. Thank you so much.
Yes, sir.